Fellow shareholders and analysts, good afternoon. First of all, on behalf of Peak Sports Products Company Limited, I welcome you to our 2013 interim results announcement. Thank you for, taking the time in here, especially during a typhoon. Allow me to introduce the management present with us today, who is Mr. Xu Jingnan, the chairman, and CEO Mr. Xu Zhihua, and CFO and Company Secretary, Mr. Choi Ka-ho. In the upcoming, the management will introduce to us the 2013 first half operating results and also future strategies. First of all, allow me to invite Mr. Xu Jingnan to say a few words with us. Respected friends from the investment field, good afternoon. First of all, welcome to the Peak Sports Products Company Limited 2013 interim results announcement. Because on the first half, the Chinese economy is lacking in drive. The sports products industry is still facing a lot of challenges, but yet we see a lot of opportunities as well. Peak Sports, 2 years ago, meaning 2010, second half of the year, we already spotted the problem. Therefore, we took the initiative to make certain adjustments. Let me cite some examples. In terms of operation, we took several measures. First is for clients, because at that time, the costs were higher, rents were higher, so we took the initiative to reduce the discount from 4% to 3.5%. And also on internet sales, we applied the same price, online and to buy in shops to simplify the matters. We gave away some profit to the intermediaries, and thirdly, we also adjusted our subsidies to the shops. Originally, we were able to adjust the discounts and subsidies according to the performances that these stores were able to provide. For those who are not efficient, we decided to close them. And we therefore closed a lot of shops in 2012. These are some of the measures that we took initiative to put forth. And we also were able to adjust some of our inventories and many of our sales strategy and channel support. I can say that through these 2 years of efforts, we have been able to reach some preliminary targets. We were able to further expand our international as well as our domestic markets. As well as brand building, we have always held the motto that the brand is our life, and that we will place a lot of importance, the utmost importance, in brand building. So in the first half of the year, we have been pushing forward our implementations on our global branding. For example, sponsoring some NBA players. There are already 5 NBA players who are working with us. For example, those teams from the Toronto Raptors, the Miami Heat, and the Houston Rockets. And also with Europe, some countries in Europe like Germany and Serbia, we also are partnering with them. These are very meaningful because we would be able to push the Peak brand in the international sports tournaments, and which would be able to enhance our brand equity. And for Asia, Asian countries like Lebanon and other countries, such as the Iraq football team, Cameroon, New Zealand, Australia. These national teams are all using peak products. For example, with the Asia Championship, they were able to win the game too. Wearing peak products. That goes to say that, for example, the NBA final games, the Rockets, as well as its counterparts, are all wearing peak shoes. Players such as Tony Packett, So through various measures, we were able to enhance our brand positioning, such as our basketball shoes. We were able to do quite well in the first half of the year, and the supply is actually shorter than demand. Now, despite the global economic uncertainties, we believe that the structural adjustments of the industry will continue. For some shops, the costs have now dropped to a very reasonable levels, and it will take still a further time for us, for the industry to absorb its inventory. But Peak has been prepared ourselves for that, and to us, we believe that the opportunity for us is here. An international brand, a professional brand, our basketball shoes, this position has already been illustrated and characterized in the industry, and we will be delivering on our promises going forward. This is a strategy of ours. Our competitive advantage is not only in here. We are also very strong in terms of supply chain and also internal control. So later on, we will be sharing these details with you. Despite our results when compared to same period last year, we saw some decline. But if you compare with the lowest point, second half of last year, we have been able to see some improvement. We straightened on internal control and leveraged on our strength, so that we are able to reach some good results in the first half of the year. And I'd like to take this opportunity to thank you for your long-term support. And I'd like to thank you again, all our shareholders. Thank you for your support to us. We will continue to work hard and to perform better results and gain, further value for the shareholders, for our employees, and for the community in large. And now let's invite our CFO, Mr. Choi Ka-ho, to go through some of the financials with you. Thank you, Chairman. Now, I'd like to go through very briefly with you some of the financial data of our first half of the year, a general introduction, and then I would go through with you some of the changes in each of the sectors. Revenue was 1.1729 billion in the first half, which is a 27.3% decline compared to the same period last year. And gross profit is 398 million, a decline of 34.5%. And operating profit is 150.5 million, and net profit is 89.9 million, which is a 62.5% when compared to the same period last year. As for net profit margin, which is 7.7%, a decline of 7.2% versus same period last year. And EPS as well as diluted EPS is 2.49 cents per share, and the board of directors has decided to distribute a total of 8 cents for interim distribution. That included 6 cents of special interim dividend, and the dividend ratio is higher than last time, which this time it is 148.7%. Now let us go through some cost figures. Advertising and marketing for the first half of this year, it took up 11.2% of revenue, which is 1% versus a decline versus last year. That's within our budgeted control. And also employee expenses, because it included the labor costs at manufacturing, because our asset, because this is actually the drive for our rise in cost, because we have a 44% increase this year. Last year it was 39%, so that was an increase. And also our R&D expenses also saw a large increase. This first half of the year is 2.5% of revenue versus 0.9% of same period last year, is somewhat a big increase. This is a delivery on our promises that we will strengthen our R&D in order to be better in terms of design and quality of our products. And then the effective tax rate. Effective tax rate this year saw a bigger climb for several reasons. It is 37.7% this year. First reason is that last year there were 2 mainland subsidiaries that has been enjoying tax benefits, but starting this year they no longer do. And second reason is that this year, first half, we are distributing a special dividend, which is a larger dividend than last year, and therefore we have to pay an income tax 5%. Therefore, because of the dividend, the special dividend, it has also caused a rise in tax rate. Another reason is that all along there are a part of the cost that are tax deductible, but this year's revenue is not as large, so some expenses in this area were cut. So if we if we continue to cut this part, then the effective tax rate would continue to rise. And the gearing ratio is somewhat is 15.4%. This is because we have increased on our bank loans, and our quick ratio is 4.9. And net asset per share is somewhat similar to last year at the range of 1.95 RMB. Now let us look at some operating cash flow ratios. Inventories. Let's look at balance first. Versus last year, end of last year, there was an improvement, 300 million plus, which is, when compared to last year, there is a 70 million improvement. And the accounts receivables and turnover also saw some improvements. The accounts payables have also improved. It improved by 40 million. These are all reflected in the cash flow, which I will go into a bit more detail later on. As far as turnover days, our turnover days is 85 right now. For trade and accounts receivables is 151 days, and accounts payables is 45 days. Now, let's look at bank deposits as well as operating cash flow. For bank deposits at end of June, our cash as well as bank deposits totaled to 3 billion RMB. If deducted bank loans, 600 plus million, then our net cash and bank deposit balance would be at the range of 2.3 billion, which is a 4.6% increase versus the same period last year. Operating cash, first half of the year is 240 million, which is a big improvement over the same period last year, which is an improvement by around $100 million. If you look at the cash flow for the entire year, that's especially the case. Last year, our cash flow, positive cash flow, were only at the range of 180 million. And that's mainly because of our improvements in the account receivables and accounts payables. Now, let's look at our sales distribution by region. Chinese market continues to be our biggest source of revenue. In the first half of the year, it contributed 85.2% of total revenue, whereas the overseas market contributed 14.8%. The overseas revenue continues to increase. We anticipate that in the second half of the year, it will continue to rise. Now, let's look at some changes with revenue. For overseas revenue, in the first half of the year, it dropped by 11.4%, mainly because in Africa, especially some countries like Egypt, were facing political instability, and that has impacted sales. And the same applies to South America as well. And apart from this, in Asia as well as in America, our sales actually improved. In Asia, especially in Southeast Asia and Middle East, our sales actually did improve quite well. And internally, in domestic Chinese market, in the first half of the year, our sales dropped by 29.5% versus same period last year. And that's because in the first half, the Chinese economy wasn't as well, wasn't as good, and the inventory issue still lingers within our industry, and therefore the demand for new products were quite weak. Now let's look at our distribution of our China sales. We are still quite strong in the south. As you can see, it's 34.8%, and in overseas, Asia is our largest market. Then upcoming is Europe. And now let's take a look at a breakdown by product range. As you can see, apparels saw a big improvement, while shoes saw a decline. Mainly that's because this year, in the first half of the year, for apparel, we have pushed a lot of promotion activities and providing bigger discounts. Therefore, causing driving a bigger sales for apparel products, and therefore its contribution to the total. Now we can go into the ASP, average sales price. Average sales price actually saw some improvement, mainly because in the first half of the year we adjusted our sales price. As far as apparel is concerned, we also increased our sales price. But like I said just now, we were pushing a lot of promotion activities, giving bigger discounts. So that has caused an ultimate decline in our ASP for apparels. Now, our sales income for shoes and apparels both saw declines in terms of quantities. Now let's look at gross profit and gross profit margin. Our overall gross profit margin is 34% versus the same period last year. It is a 34.5% decline. Mainly, this is because of two reasons. First is some promotion and discounting activities in order to clean off some of the inventories, especially with apparels. That's the main reason. And the other reason is that for newer products, we offered an adjusted discount to distributors. Since the first quarter, we changed it from the 38% to 35%, which has caused a decline in our gross profit margin. As you can see, gross profit margin for apparels is lower than that for shoes. That's because of the degree of promotion that we are doing in apparel are higher. Now let's look at some analysis on our profitability. Net profit margin for this year is 12.8%. Same period last year is 18.9%. If we look at second half of last year, we actually has an increase. It was 8.4% second half of the last year. And if we look at net profit margin, we are at 7.7% this year. First period last year was 14.9%. If we compared first half of this year with second half of last year, we actually has an improvement. Why is it that the net profit margin is dropping? There are several reasons. First is that our gross profit margin declined, and also secondly, there's been a major increase in our R&D expenses. Another reason is that we were prepared to provide, for a price drop of 10 million, in order to clean our inventories. And thirdly, has to do with the salaries of our administration as well as general staff. And that's actually that hasn't changed it has not changed a lot. But because of the overall pie is smaller, therefore its contribution seems to be larger now. Now, allow me to hand over time to our CEO, Mr. Xu Zhihua, to go over some of our business operations for first half of the year and also future strategies. Thank you. Fellow investors and friends, good afternoon. I'm delighted to have the opportunity to be here to share with you some of the views of our first half business and directions for going forward. Just now, our CFO has went over some of our data and figures for the first half with you. Of course, if we compare year on year or with the same period last year, of course, it is not too ideal. But I think that your emphasis should not be here. We should all be looking at whether peak or maybe the entire industry has reached its rock bottom and whether there is any opportunity to recover. Now, allow me to say, to point out a few points which Mr. Chai has also spotted out just now. Despite that, our sales dropped. That's because, of course, of our initiative to close some shops and make some adjustments to channels, etc. 2 years ago, we did a series of adjustments, and that we are seeing the results now. So that goes to say that this decline is expected. But through these 2 years of adjustments, our net profit margin and our net profit has already reached the lowest point, and it's prompt for rebound. We were at 5 point something for our net profit margin last year, and this year, first half of the year, this same ratio is 7.7%. Last year, our net profit is 70 million, and second half of, when compared to the same period last year, this is lower, but if you compare to the second half of last year, it is actually an improvement. And our net operating cash flow, despite all the challenges and all the difficulties, peak has never been in red. Our net cash actually saw a lot of improvement this year, and we were at the range of north of 200 million for the first half of this year. So through these two data, what I wanted to tell you is that peak is a stable, prudent shop, very capable of being a 100-year shop, and whatever we do is for a continuing sustainable development. This explains why 18 months ago, 2 years ago, we took the initiative to close some shops. We are the one in this industry that has closed the most shops and reacted the most to policies. Now you can understand why we did that then. At that time, we took the initiative to reduce the discounts, to improve the discounts from 4% to 3.5%. And we are the one which closed the most shops in China. The reason being is that we would go for a good and sustainable development. Of course, I believe that you are more interested to know what we have done and what would that mean for the second half. All along, for peak, we have been standing firm on our core strategy, which is professionalism and internationalism. This strategy has been in place ever since we became a listed company. At the beginning, it was not recognized or agreed to by investors, especially the internationalized part. But after several years of hard work, I believe that our work would start to reap fruit in the second half of the year. Because of the economic situation this year, we took the strategy to work with NBA. Four of the 4 teams in the East and West Coast, 3 of them actually has members that are sponsored by us. For a continue of 5 years, we have been sponsoring our NBA players. In the internet, this is also something that consumers have spotted. Every time the champion, would definitely consist of some peak players. This speaks of our professionalism. Tony Parker this year has signed with us starting January 1st this year, wearing our Parker shoes, and that is driving a very evident effect and helping our brand to become more internationalized and professional. And it also brought forth, very significant benefits in our revenue. And this model of shoes is short in supply. And also with domestic, in the international markets like Philippines and United States, we see the same phenomenon. Because of our persistence for the last couple of years, we are seeing some results in our expansion in the international markets. In the overseas market, our main strategy is the series of basketball players, products, and accessories. And through the promotion with Parkers, many countries and many teams are pursuing collaboration with us, and it is enhancing our global position. In the past, well, this is easier said than done. At the beginning, when we introduced this idea, many of our investors did not approve of it. Why? That's because Chinese brand did not, promote or win with the brands internationally before. They rather relied on cheaply made in China, that being a strategy. And the main channels were Walmart or other mass low-end channels. The average price of a pair of shoes is in the range of $20 to $40. So, of course, at this price point, you cannot create a brand. But in USA and many countries, our shoes are selling at $80 or $100 now. So, and that speaks for the acknowledgement of our channels, and they see us as a brand that can work with them. And this is a result of the many years of internationalization and professional pursuit. So of course, Parker's signing with us has played a very important role here. So this is our work with our brand in the international market, ripening some fruit. We anticipate that in the second half of the year, our sales in the international market will see a visible growth. Now, apart from Basketball, because our focus on professionalism, we are also working with FIBA. As you can see, this Asian championship that has just finished in Philippines, despite the champion, the Iran team also wears peak. The referees are also wearing our products too. Despite that, the China team lost, the peak did not. We actually, went with the champions. So we, built ourselves within the basketball range. Of course, we also sponsored many national teams, and also many university teams. Apart from basketball, because we have to build professionalism, we also signed around 20 WTA members. And basically, we provided supplies and products, and we do not need to put in cash. And these are all world-ranking athletes. For example, in the latest championship and matches, many of the winners won peak products. So this helps to build a professional brand positioning. And it is very important for our expansion of the international market. So this is our brand strategy. Now, as far as channel is concerned, as you are all aware, we have been actively adjusting our channel strategy. Over the last 2 years, we have closed off around 1,000 shops. And our overall strategy is that we will control the total number of sales points at around 6,000. And our goal is to flatten out the channels, we call it the economies of channels, through closing down of inefficient spots or inefficient retailers or distributors. And also, we changed from using only one distributor in a province to several distributors. By doing so, we were able to increase the number of distributors. As end of last year, we had a total of 59 distributors, and this year we already have 63. Towards the end of the year, this number will continue to rise. So this is our strategy on further segmenting our channel strategy in order to flatten the hierarchy is to improve the profit margin for everyone. And because in the past, this ratio continues to increase. 38, if I recall correctly. What I mean is our distributors contribute around 38% of our total sales, whereas previously it was 35%. Through this adjustment, this type of distributors, they would have a higher ability to fight adverse risk because they have a larger margin to play with. And we will continue to apply this strategy. As you can see, we have pushed out, we are slowly but gradually improving the outlook of our shops. You may be more concerned about our inventories. As far as inventories, we feel that we have tackled this challenge quite well, and we are very close to a healthy stockpile level. We are keeping around 4 months of inventories within the channels, and our goal is to reduce that further to 3 months. As for our own inventories, our overall inventory has also declined. So I feel that channels inventory are moving towards the healthy side. And towards the second half of the year, if everything goes on, nothing goes wrong, then basically we are out of the challenge. We have already tackled the challenge. Now, as to products, as you can see, despite that we have a very high pressure in sales, and there is one type of expense that we continue to pursue, and that is R&D. Despite the fact that our gross profit margin has declined, but we continue to spend in R&D. This is a very important guarantee on our part on the professionalism of our product. That's why we continue to invest and investing more in our R&D so that we can truly satisfy the needs of professional athletes. And so also that the common consumers can also benefit from such technologies. This is our fundamental strategy on branding, on channels, and on our product offerings. Since Q2 in 2012, we have changed our procurement strategy because we do not have any previous data to compare with. That's why we did not disclose these figures. This will probably come in the interim results of 2014. At that time, we decided to reduce on futures and to increase on spot. That's a decision to be more to provide a better environment for our intermediary players, our partners. Now, as this would be the main points that I would report on. As for the other areas, there isn't a lot of changes, but I welcome your question. We believe that for Peak, because of our 2 years of hard work on adjusting our strategy, we have fundamentally worked out our issues in the international market, especially in the next half. I think Peak should have a very good performance.